Hello everyone, my name is Shubh Sharma and I welcome you all to this pre-market report. Let's start with US market. Yesterday US market fell by more than 300%. That mainly happened because the yesterday US job data came, which was less than expected. And job data is a direct reflection for the health of the US economy. So that really impacted the US market and it fell by more than 300 points. If you look at Nasdaq even fell by 127 points. S&P 500, matter of fact, even fell by 23 points, so which was a very bad loss for the US economy. Now today the US 30 is trading at negative, flat to negative, around 20 points negative, so that we have to watch out. Now if I talk about FII and DII data, yesterday FII sold about 5,588 crores, which is a huge number, and DII bought about staggering 6,373 crores. So definitely there's a firefight work between FII and DII data. There's not a single day since the last 2 weeks FII are buying. FII are continuously net sellers in this market for the past 2 weeks. Matter of fact, even DII are the only institution which is holding up the Indian market. So that we have to watch, and the level of shorting that they are doing on index stock futures, stock options or index options are brutal. So we have to watch out for the FII positioning very closely, how they are positioning themselves in this brutal market. Even though yesterday Nifty gave a sharp up move in the beginning, later it fell by more than 50 to 60 points, but we'll talk about this in few minutes. Even on this rally, the FII shorted heavily, right? Now today SGX Nifty showing a gap down of 100 plus points, but we'll see where the futures pre-market report settles. Now let's talk about Nifty and Bank Nifty levels. Yesterday Nifty closed about 24,756.6. Next supports for Nifty lies at 24,600, 24,700 and 24,750. Yesterday low is very important for very short term. If we fell below yesterday low, then we can even head to 24,450. Now the major resistance, yes, as you all know, the major resistance stands at 25,000 and 25,000 and 25,200. So yesterday, even though the market gave a fantastic move from closing around, it opened at 24,620.30, and from there we saw around 400 points move, right? Even though market gapped down about 200 points down, they tried to recover 200 points, plus it came in 50 to 60 points positive. So 300 to 400 points, if you manage to capture on intraday, then you would have made up good money. But from 25,000, Nifty fell almost 50 to 60 points. So definitely 25,000 is going to be a big hurdle for the Nifty, and closing about 25,150 is only will say that yes, this down move is temporarily stopped, and we can even see 25,500, 25,400. But all eyes will be on the second deal negotiation that will happen on later this month. Now coming back to Bank Nifty closed at 55,917. Support lies at 55,500, 55,800. And resistance lies at 56,400 and 56,500. Yesterday, Bank Nifty underperformed as compared to Nifty. It's mainly because of the corporate results, and the private banks were under pressure. Now, if I talk about PCR, which directly indicate how the market is feeling, what's the mood in the market, it is above 1. So that is a very bullish sentiment for the market, and lot of put has been shorted as compared to calls. So I'll tell you more about PCR. If PCR is above 0.7, it means people are selling more put options than call options. Selling more put options indicating a bullish momentum in the market. So people are very bullish in this market. They are selling more aggressively put options than call options. So that's a very technical knowledge that I have given you. Now talking about sector specific, FMCG is the only sector which outperformed as compared to every other sector. If you look at IT, pharma, all were under pressure. In my pre-market video, I said it that IT, pharma, auto, all these sectors will be under pressure because of the news, and it was under pressure. Except if you look at stocks like ITC, Britannia, HUL, all these sectors were doing very, very good. Even the matter of fact, Geo Finance were doing very, very good. Rest index all were in the red. And another major news which all we should focus on is rupee fell by 5-month low. Now $1 is equal to 87.95, which is a very, very bad news for the Indian economy. That is happening is mainly because of the FII outflow and the overall environment in the Indian economy. So this is a matter of concern. Even the RBI are stepping in to regulate this, but we'll see how things will work out, and we'll trade and we'll do what our charts tells. So I have given you the Bank-nifty and Nifty levels. Mark those levels on your charts and trade accordingly. I hope you have a profitable day today. I'll see you tomorrow. Thank you. Bye.